Why is the Phoenix housing market struggling to gain traction? Today, I'm giving you the lowdown on the February 2024 Phoenix real estate data you need to make an informed decision as a buyer or seller in Phoenix, Arizona. Let's get into it. Before we jump into all of the numbers, I want to chat this month about two important things I've been getting asked a lot of questions about: elections and renting versus owning in a higher rate time. Every 4 years, there is an expectation that the drama, uncertainty, and manipulation that comes with presidential campaigns will dramatically affect the housing market, specifically prices or mortgage rates. Spoiler alert, it doesn't. The main influence on the housing market comes from policies, not the elections themselves. For instance, the stimulus packages and policies that were passed during the 2020 COVID-19 election year and continued into the next administration were the first stones to cause a ripple effect of fortunate and unfortunate events in the housing market over the past 4 years. So, what's to be expected this year? There is one market that can be affected by an election, and that's the stock market. After the last 4 elections, the stock market has responded positively afterwards, which affects both luxury buyers and retirees with high percentage of cash purchases. If a cash buyer expects their investment portfolio to be worth more after an election, they may simply put off their home purchase until the spring. This can cause contract activity to stagnate for a couple of months, but not enough to affect prices, and this mild effect can be offset by other mitigating factors like seasonality that would make the impact unnoticeable. With many existing homeowners comfortably staying put these days, more attention is placed on first-time home buyers, affordability, and supply of homes. The first thing that comes to mind is the choice between renting and buying. According to Real Data, the median cost of a 3-bedroom apartment at a 50-plus unit complex in Q2 2023 was $2,100 per month in Maricopa County. The median size is roughly 1,250 square feet. The past 30 days of sales show the median sales price for a similar starter home to be about $370,000 in Greater Phoenix. Now, many first-time home buyers put down 3.5% on an FHA loan, which is about $13,000 on $370,000. And last month, nearly 60% in this price range had a seller or builder agree to contribute towards closing costs with a rate buydown. That's a median contribution of $10,000 from sellers. On February 1st, the average FHA rate was 6% according to Mortgage News Daily. With the 2-1 buydown from the seller, the first-year estimated payment would be about $2,159 per month, including taxes, insurance, and PMI. A permanent 1% buydown would equate to $2,375 per month. This puts the monthly cost to buy a small starter home within a few $100s of the median rental rate. In Pinal County, the median cost drops to $310,000, and over half of the properties sold in the past 30 days are newly built within the past 5 years. On a 2-1 FHA buydown, the estimated payment, insurance, taxes, all of those is $1,825 per month, and a permanent 1% buydown would be $2,000. Currently, there are 344 active single-family listings between 1,200 and 1,500 square feet with 3 bedrooms under $370,000 in our MLS. So, can these homes actually be found? 56% of these are actually in Pinal County, so Santan Valley, Maricopa, and Casa Grande. This is a hot market segment. 2024 is expected to be another year of change for the Greater Phoenix housing industry, but this time the shift is expected to be towards stability and home appreciation and improved affordability measures as incomes catch up with us. Well, our hope may have been short-lived with interest rates jumping back up into the 7s. We don't like to see a 7 in front. Our housing numbers are a little disappointing, but by no means disastrous. This is not the recovery in volume that so many of us were impatiently hoping for. The rate at which contracts are getting signatures is lower than we expected and much lower than normal. We are starting March with only 8,600 listings under contract, which is down 4.6 from this time last year, and last year was well below normal. The slow contract signing rate means active listing counts have continued to grow steadily, up by 2,000 since the start of the year. Last year, we saw a fall of over 1,500 over the same period because new supply was much scarcer then. Before I dig into our prices, if you're finding this video helpful, don't forget to give it a thumbs up and subscribe to my channel for more updates, insights, and the latest Phoenix real estate market data. Let's chat about prices and concessions. Our median sales price was $445,000 in February. This is actually up 7.2% from this time last year. We are also up 1.7% from last month based on the monthly average sales price per square foot. 46% of sales in February had some sort of seller concession, with the median amount being $9,400, which is down from the high in December of $10,000. That $275,000 to $400,000 price point is seeing 60% of closed sales have seller concessions, with a median amount of about $8,100, which is actually down quite a bit from last month. The overall Cromford Market Index is stuck near 117, so a weak seller's market. We do have 10 out of 17 cities are still seller's markets. We have 4 that are balanced and 3 are buyer's markets. Queen Creek has moved back into the balanced range. Demand is still rising, although very slowly. Supply is still also rising, but at a slightly faster pace. This means there is now a small amount of momentum towards a more neutral market. This does not apply as much to the Southeast Valley, which is still significantly favorable to sellers. Glendale, Avondale, and Phoenix are also in the control of sellers. There is still no sign of a market crash in the short or medium term, but the market is struggling to gain some traction. Market conditions are currently quite stable, so the idea that some sort of collapse is imminent is extremely far-fetched. The healthy amount of incoming supply is not quite matched by a small improvement in demand, and the balance between sellers and buyers only favors sellers by just a small amount when considering the market as a whole. As always, if you have any questions about buying, selling, or the Phoenix housing market, don't hesitate to call, text, or email. All of my contact info is below. Until next time, happy house hunting.